I'm happy to welcome everyone to the Upscale YouTube channel. As always, I'm Igor Fox. And today we have another interview with a funded trader named Evgeny who stands out because he trades exclusively from his phone. He has already managed to receive 2 payouts on a $10,000 account. And that's definitely something to be happy about because you can do the same, namely get up to $800,000 in trading capital under management without risking your own money. So let's get to know Evgeny. Let's go. Hello, Evgeny.
Hi, Ivor.
So, what brings you to us? So, how did it happen that I invited you for an interview?
Well, it just so happened that I was actively trading on Upscale recently, and as a result, I got invited to participate in today's interview.
Can you tell us, please, what you do besides trading? How old are you, and how did you get into trading?
I live in Europe. I work at a financial company, so I work in the finance sector. It's a job related to financial reporting, company risk assessment, and checking financial documentation. So I work in the finance field, specifically in financial services, and I've been doing this kind of work for quite a while now, several years actually. Basically, I'm interested in finance.
So, basically, you're pretty familiar with investments, right?
More or less, yes.
Okay, and what happened next? So, you know your way around finance, but how did trading come into the picture? Yeah,
Trading started quite a while ago for me. That was back when Forex and Forex brokers were around. At that time, I tried trading on Forex with high leverage, studied, looked at different indicators, and learned about the markets. All of that basically didn't lead to success because when you have a deposit of $200 to $300 and use high leverage, it all leads to the same result, losing it all. Actually, my main focus in finance is investing. I started consciously investing in stocks, ETFs, and funds in 2020. I got introduced to crypto at its peak earlier in 2021. I started learning about Bitcoin, Ethereum, and Solar. I got to know altcoins and realized basically that at that time, all the altcoins were total scams. They were absolutely worthless. I also learned about the DeFi space and decided for myself that investing in cryptocurrency at that time, in 2021, made no sense. But I decided for myself that in principle, Bitcoin might have potential in the future. And starting from 2021, from the peak of the bull run, I just began to buy spot Bitcoin and Ethereum every month. This continued throughout 2022 and 2023, and in 2024, when the hype rose again, Bitcoin went up and everyone started talking about it. I just checked my portfolio and saw there was a very significant capital gain. I sold everything and realized my profit. And from that moment, I started building a new portfolio. I started building a portfolio with a focus on altcoins. This was at the beginning of 2024. I put together a solid portfolio of altcoins, which eventually, by the end of 2024, delivered a profit of more than 100% on my deposit. In December of the year 2024, I decided to close out about 25% of my total profit. And the profit I locked in at that time, those 25%, basically saved me because right now my portfolio is down 70% from those levels. But thanks to the realized profit, I'm still in the black.
that's quite an inspiring story. What I'm curious about is how did you, originally being in the traditional market, end up getting into crypto in 2021? Where did you first hear about Bitcoin? Was it from some media outlet where it started popping up, or how did it happen?
When Bitcoin starts to rise, it always happens, as a rule, at the peak, when everyone is talking about it. I honestly don't remember exactly where I first heard about it, but it was either on TV somewhere or written about in newspapers. It's the standard way retail investors come in, always at the very top.
Everything you've described so far is basically just investing. In other words, it's much more like spot trading. But let me ask you, have you ever had any actual experience trading with leverage using your own funds, either in the world of crypto or on the traditional financial market? Or did you simply just pass by that opportunity without really getting involved?
Yes, I have. So, as I mentioned before, a long time ago, I was really into Forex, trading there with high leverage and a small deposit. I also traded stocks, not just spot stocks, but I also used a bit of leverage. I tried to catch certain price movements, and honestly, I did pretty well with that, but I never had a large deposit specifically for trading. After the year 2024, when I initially began the process of building and developing my spot portfolio in the world of cryptocurrency, I was also extremely active and engaged in trading on various Solana decentralized exchanges, commonly referred to as DEXs, during what was widely known as the so-called meme season. Throughout that entire period of time, I experienced and went through a range of different emotions and outcomes. I had both significant ups and notable downs along the way. During that meme season, you could definitely say it was a really risky kind of trading at the time.
You've told me that you've been through fire and water with meme coins on Solana, trading Forex with different currency pairs, trading stocks, buying Bitcoin and altcoins, and I'm more than sure that both I and our viewers are really interested to know what your actual trading strategy is. So I suggest we move over to the trading terminal or somewhere else and really break down what's going on with you there, how you look at things.
Yeah, great idea. Let's take a look.
Could you please tell us what exactly we're seeing on the chart right now? And could you also describe how your trading day is typically structured? How does it all begin for you?
Let me tell you a bit about my trading. Basically, I've tried a lot of different indicators, various strategies, and read a ton of information. In the end, I realized that none of that is really necessary. The most important thing on the chart is the price itself. You only need to pay attention to the price. All the other indicators just copy the price. They just copy the movement of the price and can't show you anything new. For myself, boom, I came to the conclusion that the best thing that works is levels. That is, there are always certain levels on the charts that the price reacts to. There are levels where the price reacts more strongly, and there are levels where the price reacts less. But it always bounces off certain levels or moves towards certain levels. It doesn't matter whether the price is in a flat range or if there's a trend, then a pullback. So for me, I always look only at levels, and there are also consolidation zones. So consolidation zones, levels, and that's basically it. These are the only tools I've chosen for myself, and as practice shows, they work. If we look, for example, at this chart, this is how I assess when to enter a trade. I always start by opening the weekly chart, and I always begin with three coins, Solana, Ethereum, and Bitcoin. So on these three coins, I open the weekly chart and look at what important levels there are.
Why exactly this choice? For example, with Ethereum and Bitcoin is clear, but what does Solana have to do with it?
The point is that Solana, for me, is the favorite among ecosystems. That is, I always try to look first at the main coin of the ecosystem, but I don't actually trade it. That is, I try not to trade Ethereum, Bitcoin, or Solana. I don't touch them. Why is that? Because in the Solana ecosystem, the coins, meaning the altcoins, usually follow Solana. So if Solana drops, the altcoins will drop too. If Solana goes up, then the altcoins from the Solana ecosystem will most likely go up too. The difference is that because they're less liquid instruments, they fall very quickly and rise even faster. Usually they grow faster than Solana itself. Not all of them, but some altcoins really can show bigger gains at times than Solana itself. That's basically the idea. I evaluate based on three currencies, kind of like three ecosystems, and entering a trade usually, not always though. More often, I end up doing it with some altcoin.
So look, right now on the screen, we see a terminal open on the computer, but you always trade from your phone. How did it even happen that you only trade from your phone?
Yeah, it turns out that I opened this terminal for the first time just yesterday. So I've never worked with this terminal here before. It's completely new to me.
On the computer?
Yeah, on the computer.
You've never worked on the computer?
Yeah, on the computer. Because, I don't know, I just got used to it. Trading from my phone, I opened Upscale and Telegram, and it was super convenient that you just open the app and you can trade. You don't have to go anywhere or sit down somewhere. And for my strategy, I don't need to put a million indicators on the chart or calculate anything or draw some super complicated lines and stuff like that. It's enough for me to just glance at my phone. I can immediately see roughly what levels there are and where the price might go. I set things up according to I set my risks, money management, my position, and that's it. The simpler trading is, the better. In my experience, you don't need to know all the technical analysis patterns, flags, or whatever else. That's absolutely not important. There are always consolidation zones and zones of explosive growth. There are levels, and the price always moves between them.
So we've had hype hanging on our screen for quite a while now. Can you tell us what you see on this chart right now? Because I see a green zone, a red zone, and a few other zones. Can you explain how you see it? So,
I see it like this. This is the chart of the hype coin. The zones and support/resistance levels, to me, aren't just some lines on the screen. It's not just a zone, like, for example, here at 52,000. And that's it. No, it's always more than that. It's some kind of range, some kind of interval. That's why I don't draw all my zones like this, but instead I mark them as relatively small areas. So it's not just a single one. This zone can be wider or it can be narrower. But that's the principle I use for marking support and resistance zones. Here I see that the price was bouncing off the zone around 50 for a long time, give or take, then dropped down and also hit a very strong support zone. What determines the depth of a zone? The depth of a zone depends on what kind of wicks were formed, where the wicks reached, and for example, how many times those wicks touched that zone. How many times they broke through, I'd take roughly the average. So I look at it, it's all pretty subjective, meaning there isn't really a strict rule for how to draw this zone. I carefully look at the specific points on the chart where the price most frequently touched, approached, or even broke through certain levels, and that is exactly how I draw and determine this particular support line. For me personally, the past couple of weeks have truly been the hardest and most challenging of all since May. I have an Upscale account open. I opened it in May. Since May, the last 2 weeks have been the toughest for trading. I took a lot of stop losses. Basically, I got stopped out of all my positions. I can show you how it all happened. Let me explain why I have the hype chart open right now and why this trade is open. I saw that the price reached the lower support zone. It touched that zone, and there are always two options here. Either it breaks through really sharply and strongly and goes much lower, or it starts to react to this zone somehow. It might react quickly and return to the upper resistance level, or it might linger here for a while, get stuck, but there's always some kind of reaction near these levels. In my case, I see this zone and I have absolutely no idea where the price will go from here, whether it will go further down or move back up. I factor that in already, meaning when I open a trade, I'm already prepared to get stopped out here. And I set my stop losses right away. I don't place a trade if I haven't calculated my risks. So here the risk is calculated and I'm absolutely ready to accept it. If you look here, the risk-reward ratio is 4.7. What's your usual risk-reward ratio, by the way? Yeah, my risk-reward is at least 2 to 1. So if a trade is less than 2 to 1, I don't take it. Let me show you the stop losses I've taken over the last 2 weeks. I'll show you using Bitcoin as an example here, even though most of my trades were mainly in altcoins. I had one open trade on Bitcoin. Here, we reached this level. The 100 level, 100,000 on Bitcoin. It was a pretty strong level here, and I expected the price to react to it. And that's basically what happened. So I had a trade open here at 100,000 where I went long. The price reacted to this level. It moved a little in my direction, and in the end I made 100 here. I had a lot of trades like this. They were on ANDA, on TAL. I also had a trade on the PAM token. Actually, I really enjoy trading this instrument. If we look here, I can immediately see that there's another support zone here. In this case, last week I also opened a long position from here. From this zone, this was my initial target. And my stop was actually minimal. So my stop was somewhere right around here, very close. The risk to reward ratio here is 17.4. The price basically moved to my direction. There was a pretty good profit here. I locked in, I think, 30% of the profit here. In the end, the price came back and stopped me out at break even. I re-entered with a minimal stop, took a loss of 100, and now it happened again. So on this trade, I lost. Yes, because again, it's psychology. If I got stopped out at break even here, maybe I shouldn't have entered again, but I'm really drawn to this level from which the price should react. Either it bounces off it again, or there will be a sharp drop down from here. Now, let's move on to the most intriguing part of the story. Specifically, you came to us because you had successful payouts of $280 and $180. Can you tell us about your journey? How many challenges did you take? How many didn't make it past the first or second phase? And in general, everything related to passing this verification stage. So I started my challenge for $10,000. It was mid-May. It turned out that I started it but didn't really trade much. I had very few trades. I was only trading on the daily chart. Now I mostly trade on the 4-hour chart, looking for entries, but back then it was only daily charts. I traded like that until about August, and I was actually in profit. I didn't pass the first phase, I didn't even pass the first stage, but I was in profit. And in August, I decided to take it more seriously. I switched to the 4-hour chart. That is, I started looking for entry points on the 4-hour chart using daily levels as my reference, so to speak. After that, things started going really well. I immediately opened another demo account for myself. I opened the demo account so I could diversify my trading strategy a bit. So on the demo account, I set wider stop losses. For example, I didn't move trades to break even like I do on my main account. In other words, I let them run until the very end. Basically, I started actively trading both of these accounts at the beginning of August. At the beginning of August, everything started going really well. Yeah, so it turns out that at the end of August, I finished in one day. I completed both accounts, both challenges. Then, in mid-September, I passed the second challenge on my main account, and the demo account was completed on October 10th. So roughly speaking, it took me about 1.5 to 2 months to complete these two accounts.
So you basically passed them on your first try.
I passed them on my first try. Up to this day, that is, for all the time I've been trading, I have never had a drawdown of more than 3%. Total drawdown. So it was always, all my drawdowns were less than 3%. In September, so the end of August and September had some really good trades, really good entries. The market gave a chance to make money, but I missed out on a huge amount of profit because I closed positions way too early. And
At this point, speaking of profit, let's move on to the certificate section.
yeah, there was one profit, 287. And then just 14 days after that profit, I got a second one, 186. So I didn't like. At the end of those 14 days, I didn't wait to try to earn more. I just withdrew whatever was there at that moment.
Tell me, please, when I talk to traders, especially those who are just starting out, they often think it's perfectly reasonable to set a profit goal of 30% per month. And well, I won't go into why, but those kinds of goals are pretty unrealistic. What do you think overall? How do you assess your profit horizon? What do you consider realistic and why?
The strategy itself is basically built on three components. The first component is the entry point, and for that I use levels. I see a level. The second component is risk and money management, and the third component is psychology. Only these three components are really relevant for trading. Everything else doesn't play any role at all. If we look at risk and money management, I have actually written out clear rules for myself. This means trading 0.3 to 0.5 to 1% of the deposit per trade. And the total daily drawdown should not exceed 2%. So, under these conditions, my profit expectations from trading are 3 to 5% per month.
That's about 30 to 50% per year.
Yes, that's 30 to 50% per year. So, if you can consistently make 30 to 50% a year from trading, I think that's better than 105% of all traders.
Look, making 30 to 50% a year in trading is actually really good. And what can you say about making 30 to 50%? On prop trading capital, how much does that really change the game?
Yeah, it completely changes the game in a significant way. And that's exactly why I actually really like prop trading in general. In fact, I find it to be a very interesting and rewarding experience overall. And that's also the reason why I'm going to keep trading here for the foreseeable future.
Can you say specifically what exactly changes? What's the main difference for you personally?
Yes, I can explain a bit, kind of share what I think about this. For example, let's take $10,000. So we have $10,000. If it's my money, it's sitting with me, and I start trading with that money. That means I take on the risk of losing money, and there's also the psychological factor. I could end up losing everything, or start chasing after missed profits, FOMO, and so on, a whole bunch of scenarios. This money is just sitting there. So these 10,000 are just sitting in my account, not working for me. And I'm trying to earn some minimal interest on them. There's absolutely no point in that.
There's no point in holding on to $10,000 because frankly, you can't really afford it right now. Not in the sense that you don't have 10,000, but that they're basically allocated elsewhere for your kids' education, to cover rent and things like that.
Yeah, that's not exactly what I meant. What I meant was that those 10,000, if invested in spot crypto and DeFi, or even in stocks or funds, would bring in much more money than just sitting in the account you trade from. But that's basically what I was trying to say. So if I personally had, let's make a comparison. Trading with cash, 10,000, or using those 10,000 in a different way, I would choose to use them differently. So, how would I use them differently? We take 10,000, use half to start buying spot Bitcoin, Solana, Ethereum, and the rest we put into stable coins and send them into DeFi. We put them into DeFi so that we can buy the dips that will inevitably happen.
So, in your opinion, can we say that trading with your own $10,000 is emotionally harder than trading with $10,000 provided by a company?
Yes, that's definitely true. Psychology actually plays a key role in trading. 70% of success comes down to psychology. I would say it's 20% risk and money management, 70% psychology, and 10% entry point. It takes the psychological pressure off you. You don't think about it as your own money. For you, it's like a demo account. You don't feel anything at all. You have no emotional baggage. You don't want to win back losses. You can calmly build your strategy, stick to it, and not worry about whether you'll blow your account or not. In my case, to blow up an account, you'd really have to try hard. I mean, I don't even know how many stop losses it would take. For me to actually blow my account, it's practically impossible.
Listen, that sounds cool. It really does. And what I'm curious about is this. When you're trading with your own money, your emotions can get the better of you. But I'm more than sure that when you're trading with someone else's capital, you might get FOMO or feel the urge to win back a position. So, do people experience that in a prop firm? And how do you deal with it?
Yes, that happens with prop accounts too. I deal with it, as I mentioned earlier, only by having a clear risk reward ratio. So, first of all, I always know that my stop loss will be small and my profit will be much bigger. And I've had trades like that. Basically, I always try to jump into some kind of trade. That is where my risk reward is 10 to 15. And that has happened. Yes, it has. So just one trade can completely pull me out of any drawdown and immediately catapult me into profit. All my stop losses aren't very small. So first of all, I always set a stop loss and I always know that this stop is like 0.5%, 0.3%.
Let's imagine a theoretical situation. So, you've looked at the chart. You see that there are certain support zones, and here, most likely, you can set your take profit. You open a trade, open a position, set your stop loss, and take profit, all according to your trading strategy. And then suddenly, out comes, say, Donald Trump. Or Jerome Powell says, guys, now we're not selling hares, we're selling rabbits. And because of that unexpected turn of events, your trade ends up deciding to go completely off the original plan that you had carefully wanted and intended to follow. So, in this kind of trading situation that I just described to you, do financial news reports and updates from around the world actually affect you or your trading decisions in any way at all? Do you ever take these news events into account or consider them when you are making your trades? Or do you think it's just crowd manipulation?
Yeah, that's actually a really good question, and it's a tough one to answer. There really is a ton of news out there, so this info noise is always present. It's really hard to filter out what's more important and what's less important. You have to try to form your own personal opinion in trading, especially in the short term. That's really tough. I mean, in the long term, I can more or less form my own opinion. I know what processes are happening in crypto, its legalization, and some new laws. I can more or less picture that in 5 years, Bitcoin will be worth more than 100. So that's enough for me. I mean, I know that right now I can buy anything below 100 for Bitcoin. And that's exactly what I'm doing with my spot holdings, because in 5 years, it'll be worth more. That's my formed opinion. And right now, it can't be changed just because of some information noise or because someone said something somewhere. Trading is a different story, short term trading. In my case, it's more swing trading. These are daily and 4-hour charts. But even here, it's really hard to form your own opinion. You're always dependent on the crowd. You hear things. It's actually really hard to distance yourself from that. It gets in the way of trading. Here's the simplest example. Last week, I had a lot of long positions that I took, and in the end, they all either closed at break even or hit their stop losses. I even increased my risks a little bit. So, for example, if I usually opened a trade with 0.5%, there were a couple of positions where I opened with 1% of my capital. Again, this happened because it was the end of the shutdown. Basically, there was all this hype that we were about to move. My levels were set, basically. It seemed to me that we really were about to move. Well, we ended up going the other way.
Wow, that sounds like a nightmare. Speaking of nightmares, what was your toughest day in trading? The one that stuck with you so much you never want to repeat it?
Honestly, I haven't had days like that in trading because, again, I always have a stop in place. So that's the first thing I do when I open a trade. I set a stop and calculate the risk. As a result, in trading, I haven't had a single trade that just went off somewhere for no clear reason. But I did have that happen in spot trading when I bought some low cap cryptocurrencies that eventually crashed. There were maybe 2 or 3 of those coins that lost 90% of their value. So it turns out that sticking to your trading strategy is really important, and it's awesome that you understand that for yourself. But there's something I want to point out. I'm sure that 100% of our viewers right now are people who either want to start their journey in trading or in prop trading. So, what would be your top 3 tips for them to start trading profitably? Let me say right away, this is not individual investment advice. I can offer 3 tips from my side. First, you need to understand what your entry point into the market will be. That's the very first thing you need to figure out. Here come the crypto analysts. So the most important thing is to understand what will be your entry point into the market. Second is money management and risk reward. In other words, you need to look at and understand these things. How much risk you're taking on each trade and where to set your stop losses. And third is psychology. Yes, it's tough, but you have to try. So these 2 tools, entry point and risk and money management, will already help you deal with the psychological aspect. These 3 factors are key and decisive in trading. Without them, successful trading is impossible.
All right, I got you. By the way, look, you have an amazing cat that really lifts our spirits. Yeah, she is.
A kitty. A kitty, even. Cool, that's awesome. So, we asked you about what 3 tips you could give to start trading profitably. What are 3 tips you would never give so that someone would lose? Yeah, I wouldn't recommend going on Twitter or checking out influencers who are promoting this or that currency. I absolutely would not recommend doing that. I also wouldn't recommend trading based on the news. Trading on news is very risky. I wouldn't recommend not setting stop losses either. That's the most basic thing. A lot of people just don't sell. If you don't set stop losses in trading, you're going to lose everything. It's just a matter of time. I
Assume that you have your own capital. And like others, it's enough to live on quite comfortably.
and
We have people like that too. So, in your opinion, why would someone take a prop trading account if they already have their own funds?
yeah, in my case, prop trading is a perfect fit specifically for trading. So as a trader, you can look for entry points in the market, trade, try to make some profit, while your main account or your main capital is sitting somewhere in spot in DeFi and stocks and funds. It doesn't take up much of your time. You check it once a month, see what you bought, maybe buy a bit more, move something around. But if you want to earn more on top of that, like I said before, there's absolutely no point in trading with your own money. So prop trading is the perfect option. I especially think it's a great option for people who don't have any money of their own at all. So let's say I have $150. There's absolutely no point in going somewhere to trade with leverage on $150. That's a guaranteed way to lose your deposit. So it makes much more sense to come to prop trading, take on a challenge, and when you already have a decent amount, learn to trade with that decent amount.
Look, everyone comes into trading, into prop trading and finance to make money. As we know, you've already made some withdrawals. I'm really curious to hear. So, where did all that money actually go?
All of my funds went right back into Upscale, and
What about buying yourself some ice cream?
I'll buy it next time. Actually, I reinvested everything and set myself the goal that all these accounts, which I have 4 accounts there, and I want to pass all of them.
So, basically, having a $10,000 challenge, how many more challenges did you take on?
Yeah, I took on 2 more $10,000 challenges and one for $5,000. Why did I do that? Why didn't I take on more? The reason is actually simple. It's because I have one strategy. I trade based on my own levels without any indicators or anything like that. Risk money management. With other strategies, for example, I might not move my stop to break even. So, for example, on one account, I move my stop to break even, and on the second challenge, I won't do that. Then I'll compare the results for myself, see what works better, and just figure out if it makes sense to adjust a strategy or not. And I opened one account for myself with $5,000. This is going to be my deadly account, which has a 90% chance of being wiped out. I haven't traded on it yet, but I'm waiting.
Why do you call it deadly? What's so mysterious about this $5,000 account?
There are certain coins, for example, that get pumped really hard. And coins like that, for example, if you look recently, it was Zcash. These kinds of coins are perfect for going in with, say, 20 to 30% of your deposit.
With 5 times leverage, too.
5 times leverage, yeah. So you can just kill everything off right away. But I just opened it for fun,
To try it out.
to play around.
Playing around is good, too. Listen, this was a really great interview. I absolutely loved everything. I'm more than sure that our viewers enjoyed it too. I want to thank you for it. And to wrap up the interview, it would be great to hear some words of advice from you for everyone watching us.
Yeah, thank you very much, Igor, for the invitation. It was a real pleasure to talk with you. I can wish everyone to learn and to trade. Learn to trade with Upscale, use reasonable leverage, use smart risk and money management, and then everything will definitely work out.
Are cats necessary for successful trading?
Cats are absolutely necessary. There is no successful trading without cats. I have 2 of them.
Well, I guess that's why you only have payouts. It was great to see everyone. Subscribe to our channel, leave your comments, and turn on the notification bell. And by following the links in the description, you can find out for yourself how to start trading up to $800,000 without risking your own capital. This was Igor Fox with you. See you at the tab.